What's up, guys? Welcome back to the channel. My name is John and this is John Paul Investing. Today I wanted to talk to you guys about Senseonics, or stock ticker SENS. I've gotten a lot of comments in the comment section in previous videos from you guys asking me to cover this stock, and I've been looking into them a little bit. I wouldn't say I'm super literate on Senseonics stock in just a matter of like an hour or two, but now I do have an idea of the market that they're targeting with the the continuous glucose monitoring for people with diabetes. I did find an interesting diabetes statistic for the US last year in 2020 that 1 in 10 Americans have diabetes. So around 35 million Americans have diabetes already, and almost 88 million Americans are pre-diabetic. So basically the diabetes market is a very big market. Unfortunately, it is a problem that a lot of people in America have, but this is a problem that a lot of businesses like to address and do so in a profitable way. We have companies like Dexcom, and we have companies like Senseonics that are targeting the same market. But before I did get into the video, guys, if you like watching these videos, please go ahead and take the time to hit that like button. It really helps out the channel a whole lot and it shows your support. And also, if you have not already, go ahead and hit that red subscribe button, because we are very close to 10,000 subscribers, guys. It has been a lot of work to get even to 8,000, so it would be really awesome to finally break the 10,000 mark. I know we're about 2,000 subscribers away, but I think with the help from you guys, we could easily get over 10,000 in maybe a week or two. At least that's my guess. As you guys may know, I am constantly looking for really awesome stocks to invest in. So if you guys want to follow me in this journey in investing in really high potential companies, I recommend you guys go to the Patreon group in the link in the description. This is where you guys can get real-time trade alerts or any updates in anything interesting that I find in these particular stocks that I am covering. Time is of the essence when it comes to finding really big plays in the stock market, so I highly recommend you guys check out the Patreon group and click the link in the description. I also wanted to mention that there is a chance to get free money right now using Webull. All you have to do is go to the other link in the description below the Patreon group and click on that link and open an account with Webull. Deposit $100 and you will get up to, I believe, 4 free stocks valued at over $10 a piece. You don't have to spend the $100. You really just have to open the account and put the money in there, and you will get free money essentially in the form of stocks, and then you could sell those stocks and then pull all your money out if you really wanted to. Essentially, that is the most risk-free play here. So if you guys want free money, go ahead and check out the Webull link in the description. So I was looking at Senseonics financials, and on a quarterly basis, the revenues really look terrible. What I really like is the fact that they are able to go from, a CV-19 situation earlier in March of last year, as you guys already know, the world knows, into a position where they're almost back to, they were at just $36,000 in revenue to almost over $1 million in revenue, which I wouldn't be surprised if we were over $1 million quarterly earned in Q4 of last year. Also, something that I really like is the fact that they're able to turn a gross profit in the most recent quarter, at least the most recent quarter that was reported, which was Q3. They were able to, keep $500,000 out of the $767,000 that they produced in revenues. And, compared to all the other quarters, this is a substantial increase in profitability over the rest of the quarters, which is a good sign, because in any business, we want to see improvement, especially financially, if it's going to be able to reward investors down the road. So I was watching Sam from My Financial Friend, and he did point out the fact that the reason the financials were not looking very good as well was the fact that they had to pay back some loans, I believe, which I guess were being called back because of the current financial situation. I did not look into that part in too much detail, so don't hold me to it. But essentially, that is throwing the income statement totally off whack right now. And, this is something that they're going to have to deal with, but over the next few quarters, they should be able to improve this, grow their revenues, and it'll just be something in hindsight, something in the past that really doesn't really affect the business in the long term. So as you guys may know or not know, Senseonics has been raising some money right now, and they actually increased this offering to around $100 million. And I think that this puts them in an even better position right now, because if we go to their financials, to end Q3, they were sitting on around 44 million in total assets, with around 26 million of this in cash. And this 26 million in cash alone would be enough to cover their current liabilities. And if you guys don't know, current liabilities are any debts that have to be paid within the year. So they are in a comfortable situation to where they're not in any point where they're really fighting to look for money for the survival of the business. They're able to cover their debts right now. but at least now with even more extra money, because whenever a company has a feasible product that has proof of concept, it makes it a lot safer in the investment, because now they're able to prolong any research or any downturn in the economy or the market or the business cycles in the event that, something goes wrong. They have a nice cushion, and this is money that they can use to expand the business as time goes on. So right now they're trying to get the 180-day Eversense glucose monitor FDA approved, but because of CV-19, the FDA reviewers are being swamped by, a ton of submissions right now. A lot of businesses, I feel like, are stuck within the confines of their labs, or they're in a place where they have a lot of resources right now to concentrate on R&D, especially because the economy is not really opened up entirely yet. So it makes sense that the FDA is getting slumped right now with approval requests because of this current market environment. The upcoming version of the Senseonics Eversense continuous glucose monitoring system, they're aiming to double its lifespan from 90 days to 6 months. So right now, the traditional, Dexcom and other competitors in the diabetes market, their devices are only lasting around 30 to 90 days. So what they're trying to do is to come into the market with something that would be approved for a much longer period of time, meaning it doesn't have to be replaced nearly as much. And I believe this is people with diabetes. This is, I believe, type 1 diabetes. It's kind of invasive, because they do have to, put this thing inside your body in order to sense the glucose levels in your blood. So it makes sense that they want to prolong this as much as possible, because then it makes it more convenient for people who do have diabetes, which I think is a very positive thing for people who do have diabetes, to make it more convenient for them. This way they're not having to constantly go to the doctor and get their scars constantly opened up and then let the tissues heal again and then rescar and rescar, more and more. Now I wanted to talk to you guys a little bit about Senseonics stock price here. So with Senseonics stock price, we have seen that they were pretty much dormant from around March of 2020 up through the end of last year in December, probably around the last week of December, whenever we saw the first spike to from around 40 cents to around $1.30. So in my opinion, from a purely technical standpoint and using some fundamentals in there, Senseonics is improving their product. They're aiming for more FDA approvals for better versions of their Eversense monitoring system. And I think that right now it doesn't make sense that stock price, even if the revenues are not where they are, especially during, CV-19, during a crisis like the one we experienced, it doesn't make sense that we're going to be trading, around more than half the value than we were in 2018, whenever the product wasn't nearly as good. So in my opinion, I think that Senseonics has a very good possibility of doubling in the next maybe few months to go back to this $5 marker. So I would say if you're going to be, ultra patient and disciplined in your entry price, you could wait for it to dip down back to $2. But on a technical standpoint, we already saw a dip pretty close to that here. So if we go back to this area around February of last year, we'll see that it spiked close to $2, and then it came back to $2 here in January of this year, or just a week ago actually, and it spiked almost double in price and then cut back to pretty much half price again, and then it has since popped up again. So I think if you are going to find a place to average in price, because I think it has a very good chance of doubling in stock price, I think that it would make sense to buy it anywhere between where it is right now and $2. $2 being the optimal entry at this point, and really sitting around $2.50. If it doubles to $5, you still have a potential for 100% gain there. Now, how long it'll take, I couldn't tell you, but I will say that it is likely, especially considering the position that they're in with such a huge cash position. They are setting themselves up to grow in the future, and if you are looking for a glucose monitoring company to invest in, Senseonics could be a good one to hold for the long term. Now, of course, with penny stocks like this, it is very easy for it to drop back down to, let's say, maybe $1.28, $1.30, which would essentially be cutting it in half right now. So when you invest in companies like this, you have to understand that if it does drop half in value, will you be willing to hold on to the stock? This is something that you really have to ask yourself, and not be tied to only the stock price, but what the business is doing and the potential. They have around 250 million shares outstanding, and in their peak of last year, 2019, or I guess the year before now, year 2019, they had around 20 million in revenues. You're getting around 9 cents in revenue per share at this point, so this would mean that we are trading at around a 30 price to sales ratio right now. But considering the room for growth that they do have, especially in a market like diabetes, I think they have a lot of room to run. I'm not sure how far these guys can go, or if, what kind of roadblock they could face in the future. But the fact that they already have FDA approval for a 90-day, and the fact that they want FDA approval for an even better one for 180 days, and ultimately at some point they'll go for a full year, this is a good sign. This is a business that is innovating their product. This is a company that looks like it is not going to go anywhere. Now, I was planning on buying this stock either Monday or Tuesday next week, depending on how the price action goes. If I have a chance for better entry, then I might be a little bit patient. But depending on where it opens pre-market, it'll kind of give me a sense of when I want to enter. If you guys want to know exactly when I buy it, I recommend you guys check out the Patreon group, because I will be posting alerts there for you guys when I do decide to buy the stock. And again, I do see a price target in the medium term to around $5, which is around 100% gain in this stock. So go ahead and check out the Patreon group if you do want to get updated when I buy this stock. I was actually going to make an entirely new portfolio for you guys on the pretty much all the other stocks that I've been looking at that I really like, but I haven't invested in, just because I have so much conviction in one particular company, which goes by the name Nano Dimension. But I really did want exposure to these other businesses. Nano Dimension has been having a really great run, but right now it is time to look for the next multi-bagger stock. And I'm really excited to have you guys joining me on this journey in investing, because this is something that everyone can do. Whether you have $100 or $10,000, there's always a place to start, guys. So don't be afraid to invest in the stock market. You really just have to do your research and figure out where you're putting your money. So go ahead and join the Patreon group if you're looking for a little bit more hands-on support. And don't forget that you can get up to 4 free stocks using the Webull link in the description. But anyways, guys, that is it for this video. Thank you so much for watching. If you liked what you're watching, go ahead and hit that like button. And while you're down there, go ahead and hit that big red subscribe button. And don't forget to hit the bell notification to get notified when I make videos just like this one. Thank you guys so much for watching, and I will see you in the next video.